We've seen other production cuts from OPEC and OPEC Plus, most recently in October. Right now, we're seeing oil prices up 5% for both WTI and Brent. What's the big difference this time around?
So the big difference with these cuts is these are real cuts. In the past, OPEC Plus has cut quotas, even for countries that were already underproducing their current quota. So they were actually kind of paper cuts. These are real cuts, cuts to producers who are producing at or above quotas already. So this is a real impact to the market, much more than we've seen in the past with previous cuts. I think the other factor here is that Saudi Arabia is taking such a large percentage, with 500,000 barrels of that cut, is also a very strong indication to the market that they are very serious about this and going to have a much larger impact on the market, as we're seeing this morning, due to those two factors combined.
All right, so we are seeing a big impact on the market. You're saying they're very serious about this. Give us a sense. Why would OPEC want to cut right now, especially Saudi Arabia?
So I think there's a couple factors here. I'm going to start with the first, which is OPEC Plus, aka Saudi Arabia, loves to catch the market wrong-footed when they feel that financial participants, i.e. speculative traders or short sellers, have dominated the price action and removed the trading action to be based on fundamentals, to be based on financial market speculative trading. The Saudi oil minister has said in the past he wants to make the short sellers ouch like hell. So this is clearly something that he's passionate about and he's acted on in the past. So I think when we saw this recent episode with crude oil selling off 17% in a little over a week, that really got under the skin of Saudi Arabia and OPEC Plus, and they wanted to send a really direct, strong message that they are not going to let short sellers and spec traders dominate their market.
All right, so this may lead to some people in the financial markets, quote unquote, ouching like hell. What do you see this doing to China as part of its recovery? Obviously, it's one of the biggest oil importers in the world.
Good question. So I think for China, they're getting a lot of cheap Russian crude right now, and they're also have some longer term contracts with China, and they've kind of reestablished some more of those very recently. So I think this does in some ways impact their recovery, but based on where they're getting their crude right now from Russia at cheaper prices, it'll have less of an impact than it would have had in the past. Clearly, though, I think where you're heading with this question, I think is important, is where their political calculus and their market calculus here, this all works as long as this doesn't put a dent in demand, right? So they've got to thread the needle here of, stabilizing their market, being the dominant kind of central bank to crude oil, not letting speculators take over their market, but also not pushing the Fed to make a different type of decision and or hurting their major market player, i.e. China, with higher prices. Right now, I think in this range and the fact that China gets a lot of crude from Russia, this isn't going to impede their recovery. They have to be careful.
All right, so they want stabilization, the OPEC Plus members want right now. We're seeing Brent at just about 84 bucks a barrel. What is stabilization in their minds? Is it $100 a barrel oil, or is it something even higher?
No, I don't think that $100 barrel oil is what they're looking for, because I think they're smart enough to realize that hurts their demand profile more than it helps them. So I think this kind of 85, 95 range in Brent is stabilization. I think that's where they're happy. I think if we see crude spike throughout the summer and we see gas prices spike, they will unwind these cuts that we've just seen much more quickly than they've been willing to unwind previous cuts. This was, I think, a message. This isn't necessarily something they're going to stick to if prices spike. I think they're being tactical with their movements and trying to get the market in their sweet spot, which I think is 85, 95 Brent.